Good afternoon, everyone. Welcome back to our channel. This is Blue League Markets, and welcome back to our lessons. Please don't forget to share the video, subscribe, and like so we can continue making more videos like this and help you guys on your trading journey. In today's video, I just want to explain what an inducement is. I'll just give a simple example on what an inducement is, and the next video I'll go to the chart and give a practical application to whatever I'll be teaching in this video. So I've seen that a lot of people are confusing break of structure, and they also including break of structure on places which they don't need to have a break of structure. Let's say, for instance, we're having a downtrend, right? So whenever we have a downtrend, when the market is having a pullback, it should first break an inducement, or it should go back, take liquidity, then afterwards it will continue going down and break structure. So in this case, we have our inducement there. Let's say the market then breaks that inducement, continues going up, and it take orders maybe in your extreme order block. Then afterwards it goes down as planned. Then it has pullbacks along the way. Then as it has pullbacks along the way, maybe it creates a double top liquidity, which is confirmation that the market will continue up. Then let's say it has something like this, right? So let's say the market is like this, as I told you that this was your inducement. So it broke that inducement in order for it to take whatever order and continue going down, because this is our this in this case, this is your uptrend, right? So that's liquidity. Downtrend per se, I meant to say. So it came and took orders there, right? So afterwards, this is break of structure. It broke structure there, right? So it broke structure to the downwards. So all right, we have this case, right? So the market came, created an inducement, broke that inducement, collected orders, then it continued down as it broke structure. So the first thing we need to do before we take a trade, we need to understand the story behind our a leg, the leg which broke our structure, right? So this was our swing low. It broke our swing low, confirming that this is a break of structure, right? So we need to check this leg. Let me just highlight it. We need to check this leg, right? In order for us to understand the story and where the market is going. Let me just change that to blue. So we need to understand what happened in this leg in order for us to understand where are we having our order block and where are we having inducement and where are we having liquidity. So our focus will be mainly on that leg, right? Let me delete that. I just wanted to highlight the leg. As you can see in this point, that we can have what we can have an order block here. So I'll start where it started, this leg where it started. We can have an order block there. Now the order block here becomes interesting because it swept this liquidity before it took orders there, right? So I'll just identify that liquidity that it was taken down. So it swept that liquidity, meaning here we're going to have a high probability order block. For those who don't understand what I'm talking about in terms of high probability order block, you are welcome to take our private classes, and in order for you to understand what's a high probability order block and what's a low probability order block. So we have an order block there. So the main purpose of this video, I want to explain what people do. So what people do is they'll see something like this, and they'll see a market reversing. Then when the market reverses, it will then create a pullback, then continue going down, and it will continue going down like this. Now what most people do is, okay, let me delete that, let me rewrite that. So all right, as I was saying, so what most people do is when they see the market creating a pullback like this, and it takes orders, let's say it takes orders here and it continues going down. What most people do is they'll start looking for a break of structure here. They'll say this is a break of structure. Well, unfortunately, that's not a break of structure. You cannot say this is a break of structure down because number one, the market has not yet completed its pullback, right? So it has not completed its pullback, and number two, it has not yet broken any inducement, right? So what you need to do before you say that this is a break of structure is you need to take your Fibonacci retracement and you need to place it from there to there. And you need to check that has the market completed a 50% pullback. If the market has not pulled back around here above your 50% zone, you're not allowed to take any sells because it will be what we call smart money trap, right? So any order block below your 50% zone mark, it will be an SMT. Now, because the market hasn't created any major inducement which was broken in this case, as you can see that this high was not broken, this high was not broken, this high was not broken, this high was not broken. That means none of the inducement was broken. We cannot say that the market has broken structure here. What we can say is, remember that when the market was coming down, this became our first inducement, right? So this became our first inducement. As the market proceeded down, this became our second inducement. This became our third inducement. This is our most recent inducement. So what we'll want to see the market doing is breaking that inducement. Then we'll be looking for any high probability order block here. Then we'll take that order block and we will proceed to having a long-term sell, right? So we have another order block there, but the order block there is not high probability. We could have said that the order block there is high probability. If this high broke that high, then we're going to have a high probability there and would anticipate that the market will come and take orders on this order block. Now the problem with that order block is that it didn't break that high. So if it just turned there, that means the only high probability order block we have there is that one because it broke a certain high. As long as this order block did not break that high, that high, then we don't have any high probability order block there. So we can have an order block there and call it SMT, and we can have another one here and call it SMT. So what we'll need to see the market doing, we'll need to see the market going and presenting something like this, break an inducement, then it will react to that order block. It will induce people to thinking that it's going down because now this is an SMT, is not a high probability order block. The market cannot totally reverse from here. It will then go to your extreme order block, then continue going down like this, right? So that's how you check. Now, immediately the market has reversed or had a perfect pullback, as in this case, because this is a high probability order block, and the market came and took orders there. This was an SMT just to trap smart money traders, and it broke inducement. So we need to confirm by checking three things. Did the market break inducement? Did the market take out SMT? And did the market mitigate on a high probability order block? If it did all that, you're more than welcome to take a trade then. And when you take a trade then, your trade is going to be long term, meaning your stop loss will be just above your order block and your TP will be when the market breaks structure there. So you're allowed to say this is a break of structure here. So this is a break of structure. But this here was a fake break of structure. So let me just draw a line. So this here was not a break of structure. It was part of forming liquidity. So it was a fake break of structure. Let me just put it with X like that. So this was not a break of structure. The correct break of structure was this one because the market went back and it had a complete pullback. If you take your fib retracement and you place it above your high and your lower low, as you can see that it went above your 50% zone, meaning it was on the sell zone and you were able to take a sell. So this is how you check if your break of structure is correct, and this is how you check if your order block is correct. So the first thing you need to do is make sure that your inducement is taken out. Look for any SMTs. SMTs are usually presented by a low probability order block. then the market will give a slight reaction to it. Then after that, it will go take orders on your extreme order block or your high probability order block. It doesn't necessarily mean that you need to take it on your extreme order block, just any high probability order block. Now remember guys, an order block, for it to be high probability, it needs to sweep liquidity. Let's say for example you have something like this. If it sweeps liquidity like this, then go down, just know that in this case here, we're going to have a high probability order block. Why? Because this low was taken. That's how you see a high probability order block, because that low was taken. That high, you see, was taken. So in the next video, I'll be doing examples based on this. So just watch this video, keep on watching it, repeat it until you understand the basics. The basics is that in order for you to have a break of structure, you need the market to break your lower low or your higher high, depending on whether you're having a high trend or a downtrend. Then afterwards, when the market reverses and has a pullback, in order for you to have a correct pullback, your inducement should be taken out. Now, what's an inducement? Is that pullback a market does at first, and just makes you think that it's having a break of structure, well, it's not having a break of structure, something like this. So that first pullback it does, and it induces people to think that it's going to have a break of structure, and a lot of people are going to be introduced for sells here. That's what we call inducement. But I'll make a video explaining inducement in more clear detail. For now, for just understand that inducement is that fake out the market does in order to say to you, look, we having a break of structure, come and take orders around here. So it's basically inducing you to take orders here, and take your sell here. Then what it does, it will just give a slight reaction to this point, then it will take everyone out. So inducement is also SMT. A fake order block, it's also SMT. Now SMT means smart money trap. It's trapping smart money traders. Now in my previous videos, I like to talk about retail traders. Retail traders are trapped by inducing them to think that a certain trend line works or a certain support and resistance works. Then immediately they believe that the support is strong, then they'll take their stop losses and proceed to the direction which they desire, right? So that's what the market makers do. Even in this case, they know that we trade smart money, so they'll induce us, they'll make us believe that they taking orders in a certain order block. But in true reality, they're not. They're just making us believe lies so they can take our stop losses. I like saying this. When you go to the market, what the market wants to do is take your money. So you should be smart. That's why you need to trade smart money and make sure that you think the way they do. Don't be part of any liquidity. With that being said, catch you on the next video where I'll be doing examples based on this. Thank you guys. Blue League signing out.